Hello, thank you for watching Liberty International Consulting videos. Today, we're going to talk about business plans for financing. But first, please keep in mind that this presentation does not constitute legal or financial advice and cannot be considered as that. So business plan for financing. There are two main types of financing. Financing that you could get from a financial institution, like a credit or a loan, or a person or a company that loans you money, or as an investment. Somebody who invests money in the equity of your company. First, let's look at the business plan for credit and loans. What is it that financial institutions or anybody who is loaning you money will first look at? What is the potential of the business? Does the business really have a chance to grow? What is the market for that business? Also, they will look at what is the repayment capacity. Will you or your business have the potential to repay the loan? They like to look at scenarios: optimistic, realistic, and pessimistic. From all those, the repayment capacity, and for that they will look at different scenarios: optimistic, realistic, and pessimistic, from the financial projections. And finally, they want to see who is running the business. Do they really have the capacity to manage it well, to make it successful? Do they have the ability? Do they have what it takes? So now let's look at the business potential. What can you show us to show that your business actually has potential? Industry statistics. What is your company's main line of business? What are the statistics for that particular industry? Is that industry actually growing or not? Within the business potential, we need to show what are the industry statistics. You need to show that that industry where you're investing or where you're going to invest the money that is going to be loaned to you is actually growing. That business line has a potential to grow. You need to show what the competitive advantages for your product are. What are your marketing and promotion plans? How are you going to promote your product to be able to reach your clients? And what are your financial projections? We advise to use at least 5 years of financial projections. Regarding the financial projections, you need to show that the money that you're receiving as a loan and also your own funds are enough to establish and develop the business or the new business line of your company. And it's also enough to be able to reach profitability and repay the principal plus the interest. That's very important. That is something that we'll definitely look at. Regarding the managerial capacity, they want to see who will be running the business, who will be managing the business. What's their experience, their ability, their credentials. It is very important that they realize that whoever is going to do it, if it's yourself or anybody else, that they have the capacity to execute, to bring the business to success. Now, regarding a business plan for investors, we're going to see what they would look for in a business plan. It's a bit different than a loan from a bank, a financial institution. An investor also wants to see what the potential is. Is the business in a market that is growing or not? They will also want to see who's running the business. Do they have the needed managerial capacity to bring it to success? They also want to see what is the value creating capacity of the business. Some investors might want a repayment. Some investors might want the value of the business to increase. So then later on they could sell their shares in the business, for instance. So they want to see what is the capacity to create value. So the capital of the business will grow in value. And finally, they want to see what their exit strategy would be. Will they get their money back by selling their shares in the business, their options? But definitely they want to see how they're going to get it back and what is the gain they're going to get on that capital invested in your business. Regarding business potential, it's important to show industry statistics to show that your business is in a market that is growing. What are the competitive advantages of your product or services by which clients would prefer your product or services better than the competitors? What is your marketing and promotional strategy to reach those clients? For managerial capacity, you should base it on explaining what that person or people experiences. What are the previous ventures? What have they done before? What is their background, their academic background, their academic credentials? What other positions have they held in other companies? All that is very important to give investors the peace of mind that somebody who's running the business knows what they're doing. Regarding financial projections, it's better to break it into from 1 year to 5 years. Do it by years and show all the income, all the cost of goods sold, gross profit, and then all the expenses, listing all the expenses, and then finally showing what the profit could be. You should also use financial ratios so they could know what the investment will return and what would be the investment recovery period. That's something very important for them, so they know how soon they could recoup their money. And also, as we mentioned before, we could highlight what the exit strategies could be. Is it going to be short, medium, or long term? What are the cash out strategies? Well, maybe it's when the company goes public. Then their shares will increase in value and then they can sell them. Or is it long-term profit? At Liberty International Consulting, we have more than 10 years of experience helping our clients reach their goals. Allow us to help you as well. You can contact us for a free consultation at info@libertyinternationalconsulting.com or WhatsApp 1-786-444-6193. Thank you and God bless.